Welcome to Inside Asia, a podcast by SEB, where we try to make sense and connect the dots of what's going on in Asian economies and financial markets. My name is Sean Yokota, Head of Markets for Asia at SEB. We are recording this on September 24 in the afternoon in Singapore time. I'm joined by my fellow podcast partner, Fredrik Hännel, Head of Asia for SEB and General Manager in Singapore. Hi, Fredrik.
Hi, Sean. Good to be back.
Good to have you back. Now, today, we're delighted to also have back Peter Ling-Vannerus. He's the Chief Representative for SEB's Beijing office to get on-the-ground insights from China's capital. Hi, Peter.
Hi, Sean. Nice to be back as well.
Yes, we're very excited to have you here. As always, before we kick things over to Peter and what's going on inside China, we start by talking about what we are personally seeing in Asia overall. So Fredrik, do you want to kick off?
Yes, I'm happy to. I think it's quite interesting now. Everyone in the news seems to focus quite a lot on the trade deals that the US and Trump are doing with different countries bilaterally. But I find it quite interesting to also see what's happening as a consequence of this, as a kind of counterbalance to this in bilateral deals or agreements or attempts to make it, such agreements between other countries, in particular in this part of the world, of course, in Asia. And a few examples of that I think are very interesting. One is, first of all, when the Shangri-La dialogue happened here in Singapore in June. That's a yearly security meeting that takes place here with people from all over the world. I met with parts of the EU delegation that was also, they were kind of combining this meeting with traveling around in the region to visit other countries. And now we start to see some of these, some of the result of those meetings that they had with leaders of other countries. And I think, I can't remember if it's yesterday or today, that the EU is signing a trade agreement with Indonesia, both of them having been kind of punished by the US with tariffs, 15% in the case of EU and 19% in the case of Indonesia. Indonesia is a very large economy in the region, 300 million people as a population, the world's biggest exporter of certain material that is used for batteries, for example. And they're also a big producer or exporter of palm oil. And now they are signing a trade agreement that means that within 2 years, 80% or so of the trade will be without any tariffs. That's quite interesting. You remember when we had our pod in December, when we were trying to guess some crazy ideas of what could happen or forecast for 2026. One of my predictions that no one believed in at the time, as you know, was that the EU and India would sign a trade agreement. And now, actually, as a result of the very poor relations between the US and India and the 50% tariffs that the US has punished India with, as well as the 50% between the US and Europe, now actually it looks like India and the EU will also sign a trade agreement, which I find is quite interesting. And India and China are getting closer to each other as well, although they have had very bad relations ever since the border clash in 2020, when soldiers on both sides died, and there has been very little contact. Actually, now there are talks about, the foreign minister of China has been to India on 2 occasions. They're now going to start direct flights between India and China. They are going to make it easier to get visas to visit each other. And as you know, for the first time in 7 years, Modi visited China. And I'm sure Peter will talk about this, that he participated in this Shanghai Cooperation Organization meeting, which is kind of a security group of 10 countries that took place in Tianjin in China a few weeks ago. Modi was there having meetings with both Putin and Xi Jinping, which is also quite interesting, right? And of course, both of them are buying oil from Russia, and the US are threatening to punish them for that. And India is also very dependent on rare earth imports from China. So that was for sure part of the discussions that they had. And then you've also seen Wang Yi, the foreign minister that I mentioned, visiting India, has also visited Europe on 2 occasions. Most recently, He went to Austria, Slovenia, and Poland and talked about, how Europe and China should be partners and not rivals. And of course, China is quite concerned over Poland's recent closure of its border with Belarus, which cut off one of China's most important overland trade routes to Europe. It seems that it's going to be open today again, but that's quite interesting to see as well. So all of this, that's happening, be it, trade deals between the US and different countries, or geopolitical things like the war in Ukraine, etc. There is also a consequence for many of the countries in this part of the world, and that I find quite interesting. I could go on forever, as you can hear, but I stop here and hand over to you, Sean, to comment on markets. It's all-time high every day, right?
Yes, but just on what you mentioned so far about everybody making new friends, it reminds me of my daughter. She just started her freshman year in university, and when you first show up, you don't have any friends, so everybody's very friendly and tries to become friends with everyone. So it looks like with Trump leaving the world order, everyone's trying to be friends with each other. Kind of reminds me of that. So yes, back to markets. It is kind of similar that there are things connecting the dots around the world, and I think the key theme a little bit is first is on China's outperformance. If you look at the stock markets, S&P's US is up 13%, and China's stock market is up 30% this year. So it's been a dog for 10 years, and this is one year that it's outperforming. So maybe something is brewing that we can talk to Peter about. But the second theme is on reflation that's going on across the world, where Donald Trump is coming into office, and now he's doing fiscal stimulus. He's making a Fed cut, so that's very good for asset markets. Europe's kind of doing the same thing. They're cutting interest rates, spending more. And then inside Japan, US or Asia, sorry, you have Japan probably doing the same thing with this new prime minister is probably going to spend more. And then, of course, China's been reducing interest rates and then doing more fiscal stimulus. So all this is leading to kind of a global reflation theme that can keep stock markets keep going higher.
Can I comment on that, Sean?
Sure.
I saw an interesting chart this morning. Everyone is talking about the Buffett and indicator, stock market to GDP, which is now, I think, higher than it was at the peak in the 2000 before the bust. I think it's now 210 or 220%. Or something like that. I looked at China after this quite strong start of the year. It's still only 62.7% a few days ago. In a report I saw that says that there's still a long way to go for China from that perspective. Just an interesting observation.
Yeah, I agree. And I think the government's a bit more supportive of the equity markets right now. And there's no leverage to buying yet. So I think they're very supportive. And if the government's on your side in China, it's usually a good thing. Now we'll bring Peter into the conversation. So we have a couple of major questions to bring up. The first one is on geopolitics that Fredrik mentioned with all these top leaders gathering in Beijing now. What are the implications of that you see?
Well, first of all, I have to say I've lived in many different capitals in the world, ranging from Washington, D.C. to Paris, and I've never lived in one where there's so many visits of foreign leaders. I think that President Xi in general is always working very hard on maintaining relationships with a lot of government leaders, particularly from the global south, and that has, of course, resulted in much stronger relationships and also China being able to project an image of stability to many world leaders. I think the meeting in Tianjin of the SCO, the Shanghai Cooperation Organization that Fredrik was referring to, is just one indication of this long-term strategy that China is projecting as a stable actor in global politics. And I was not invited to the amazing parade in Beijing, but I had the pleasure of watching all the tanks returning from the parade right outside my apartment building in Beijing, and that went on for several hours, obviously, bearing in mind how many both troops and military equipment participated in that. And that is, of course, another sign of China projecting force, but also trying to project stability in this world where we see particularly the US being much more fickle. But this is just a sign of a very long-term strategy that President Xi and China in general has been working on for many years. And I think the visits that in Europe by the foreign minister that Fredrik was referring to is just another part of that strategy. But it's of course also part of a strategy that China has in Europe since many years to try to a bit divide the European countries and trying to reinforce bilateral relations at the expense of relations with the EU, because those relationships are actually on a pretty low level. There was a summit in July between Ursula von der Leyen and President of the European Commission and the President of the European Council, Costa, who met with both President Xi and the Prime Minister of China. And this was, I wouldn't call it a disaster, but it was a very non-productive meeting where the only agreement was that there would be increased cooperation on sustainability. And the Europeans have decided that they don't want to participate in signing a lot of MOUs or memorandums of understanding that the Chinese like when there's no concrete results of all the grievances that Europe has with China, ranging from the Russia's war of aggression to trade imbalances, etc. And we'll get more into that later. But so China tries to focus on the bilateral European relationships rather than with the European Union, where it's difficult to move forward.
All these photo ops, some people would say that that's all it is, that there's photo ops and there's no substance underneath it. Do you agree with that assessment?
Well, if we start with a major relationship, of course, between China and Russia, there are, of course, concrete results, and I think particularly regarding the construction of a new pipeline between Siberia and China, which Russia has been pushing for many years, also prior to the war, and China has been very reluctant to agree to that investment. But that was now agreed upon. It will take a long time, so even if there's a commitment from the Chinese side, it will still take quite a few years before the construction is finished, or even the plans are finished. But there is, of course, a very strong relationship and, of course, a very strong dependency that Russia has with China. And Russia is also an example of a country that has been completely overwhelmed by Chinese exports, and there have been now measures recently on the Russian side to reduce them. But the partnership is, of course, very strong. As concerns North Korea, I think China is watching with caution the strong relationship that has been developed between Russia and North Korea, and they're not particularly pleased with that. But the fact that there was this meeting with the three, and that the Kim Jong-un traveled to China, which he hasn't done for a long time, is of course a sign that he is aware of the importance of the North Korean-Chinese relationships, and he doesn't want to upset China too much, leaning too heavily on Russia.
Okay, but beyond those two, which China's always been close to, but if you kind of bring in the other places that were standing next to him, like Indonesia's president, Prabowo was there, Modi was there. Well, what do you think of those two? Yes.
And even, well, of course, with as Fredrik was saying, in China and India, that is a huge change, and I'm sure that we have to thank Donald Trump for parts of that. They would not have moved as quickly, even though there have been efforts even before Liberation Day, particularly on the Chinese side, to improve the relationship. And the countries, of course, are very dependent. As you know, there is a move to move certain production from China to India, not only because of China Plus One strategy, but also because the Indian market is becoming much more important. But those moves are very dependent on Chinese cooperation. There has to be a lot of Chinese engineers helping to set up the factories in India. I'm thinking of Apple, for instance. There has to be fluid imports of a lot of the components from China. So for India to be successful in developing some of these manufacturing capacities, there has to be a fluid relationship with China. I think India is aware of that. So on both sides, there is an interest in normalizing relationships. And that's, of course, has been pushed much further by the US attitude towards India. Of course, concerning the other countries, it's also a sign of a deepening relationship with China in view of what is happening in the rest of the world. And the fact that also the Secretary General of the United Nations, Gutierrez, was also participating in the meeting in Tianjin is also a sign that the global South, which has a lot of votes in the UN, is pushing towards a deeper relationship with China as well. So I think that there are many, many indicators from the participants that China's role in global politics is becoming even more important, bearing in mind what's happening with the US.
I think it's quite obvious that part of this with inviting or having these pictures taking of the participants at the parade was, of course, for the domestic audience in China to show strength in the leadership, etc. I think it's one other thing, detail is, of course, that India decided to participate, or Modi participated in the SCO meeting, but he did not participate in the parade. And obviously he came partly also to send a message to the US after their relations have gone south. And after that also the US tone has softened somewhat. But one thing that's interesting that came out of this, or a suggestion rather, from Xi Jinping and the Chinese side in conjunction with this meeting, was to create some form of, if not the bank, at least some sort of mechanism to provide funding for cooperation between these countries, because one should remember it's a very loose kind of group of countries that are part of the Shanghai Cooperation Organization. It started as a cooperation around border security against smuggling, etc., and then it's evolved gradually towards something else. And like many other organizations that China are part of, the BRICS, of course, included, it seems to be usually a strategy to make it a little bit more, to find a common ground for cooperation and make it a little bit stronger and more impactful, that you also create some sort of financial vehicle to fund projects that they can do together. And I think that's quite interesting. That is something that you and I have discussed as well, Sean, in previous pods, China's engagement financially with the rest of the world, and also trying to over time to challenge the US dollar's dominance, because China knows that if they can do so, they will also be less vulnerable for US sanctions and other things that can stop China's advance in the world. So I found that part quite interesting as well.
And that also creates leverage for China. I mean, China has, as you said, both with the creation of AIIB, the Asian Infrastructure and Investment Bank, as well as the new development bank for the BRICS, is always the biggest provider of capital to these banks. And that, of course, does create leverage, although we should not interpret it as they are running these banks. In the case of AIIB, it's, of course, a very independent bank that is run professionally by people from many different countries.
Yeah, and those two things, one on the funding or giving out money, since China's still running a humongous trade surplus. And with that surplus, they're not going to buy US treasuries. So I think what you mentioned with AIIB or funding, I think is a very good channel to take it away from the US and somewhere else. And second thing, Fredrik, I think your domestic, comment is I thought it was very important, because I'm sure people inside China, you might not say it publicly, but they're wondering, like, okay, are you going up against the #1 economy in the world? Is that really the right thing? And kind of showing this group of leaders following them is reassurance domestically that you're doing the right thing.
And I think the domestic angle was also probably weighing heavily on President Modi. It would not have looked good if he, after only a few years when his soldiers were killed by Chinese soldiers wielding axes and shovels or pushing the Indian soldiers down steep mountains and the Himalayas, and then standing next to President Xi watching those same soldiers marching down the streets of Beijing. That would not have looked so nice in India.
Yes, that's a very good point. Well, let's move on to the second point, because we can go on forever on this. And the second one that comes up quite a lot now is this term involution. Involution. I hear it everywhere now. And just as a definition that I picked up is this downward spiral in prices and profits due to over competition. So Peter, can you mention a bit more about what's the perception of involution domestically and how it's impacting European companies maybe?
Yes, involution is of course, or excess capacity as in Europe like to call it, or excess production, is of course an old issue in China, and we've seen this is of course a consequence of very successful industrial policies in China, which have made China a champion, whether it's concerning solar panels or battery or electric vehicles. And it's more than a 10-year policy that China has been pursuing, both financially and strategically, creating conditions for Chinese companies to develop very successfully in some of these areas. One of the worst examples is, of course, solar panels, where both the US and Germany and other European countries were dominant players when this market was just being created, or these products being created. Whereas now China has a production capacity that is approximately twice global demand. This doesn't mean, I said production capacity, of course not production. And there's been several efforts on the Chinese side to reduce this. The last one was in November, December last year, which has not been successful. And this, of course, has led to, of course, extremely low prices, which is advantageous for us in Europe, for instance, where the cost to buy a solar panel is extremely low, and we can get cheap energy at very subsidized costs. And even the European Commission is aware of this, and in the Draghi report, it's mentioning this is as one area where there's no point in competing when trying to create an industry. It's better to take advantage of the Chinese taxpayer subsidies and buy as many solar panels as we can to create sustainable energy. So that's one example. The most severe one right now is, of course, electric vehicles. China is, as we've mentioned several times before, is by far the world's largest auto market, bigger than the US, Europe, and Japan taken together. But we have now more than 100 EV producers in China, and we used to say that approximately 5 of those are profitable. But now when we are looking more carefully at their balance sheets and profit and loss statements, we see that there are factors such as demanding excessive supplier credits, etc., that's putting even some of those 5 profitable ones into question whether they are actually profitable. And this is, of course, part of this policy that's been going on for a long time. And it's particularly vital in China that the provinces are very keen on developing companies and industries in those designated areas in China, meaning that they are providing ample subsidies. This is, of course, not only to Chinese producers, but even foreign companies. And we know that BMW or Mercedes or Volkswagen, and not least Tesla, have received tremendous subsidies. I mean, the Tesla factory in Shanghai which is the biggest Tesla factory in the world, was almost a gift to Elon Musk from the Shanghai and Chinese government. Anyway, so this has led to this tremendous overcapacity and price pressure, and we're now talking about 32 consecutive months in China with negative producer price index. So every month, companies have to reduce their prices. This, of course, leads to a severe drop in profitability for Chinese companies, where we see more than 25% of the largest Chinese companies are operating at a loss, which is actually worse than it is for European subsidiaries, which are approximately 20% who are operating a loss. But everybody is seeing very high pressure, and approximately 75% of European subsidiaries are saying in the latest surveys that they are having a profit level that is equal or below group average. And that's, of course, a problem if you want to fight for investments. If you're a Chinese subsidiary in a large European industrial group and you present a project and you say, well, then the first thing they will ask, of course, what is your projected return on this investment? And if it turns out that it is lower than group average, it may be more difficult to convince the board or the investment committee to approve that investment, when they can find that in other markets that may not be as challenging in terms of geopolitics and competition, as the Chinese are delivering higher returns. And of course, we all know that the highest returns for most groups are actually in the US still. Anyway, this is a problem, and the Chinese government is very much aware of it, and they are trying to take measures to reduce those excess production capacities. But it is very difficult. It's kind of a prisoner's dilemma for the provinces, because they are instructed to remove subsidies. At the same time, they should deliver growth, and they should also deliver employment and social stability. And that makes it not very appetizing to close down, remove subsidies, which could mean closures of factories and loss of jobs. So it's a slow process, but we are seeing, of course, some electric car makers, for instance, closing down, and the Chinese government is also pushing for consolidation, meaning that they should be absorbed into other groups. But nevertheless, capacity is too big and putting a price pressure, as I said. And this is, of course, also helping Chinese exports, which have been growing tremendously. We saw the China share of global export was 32% in 2019. It's now up to 36% in 2024, and it's grown quite strongly in the first half of this year. Now we see a flattening of Chinese export growth, but still their share of global exports is enormous, and that's of course also an effect of involution or excess capacity.
Peter, coming back to your comment there on the number of companies, European companies in China that say that they are equally profitable or less profitable than their global operations. What is the latest kind of sentiment when you meet clients or other companies in general in Beijing? Foreign companies,
yes. In general, the feeling was that the situation was improving a bit in the second quarter of the year. And now the feeling in the third quarter is a bit more negative again. But less positive after a bit of a bump in confidence in the middle of the year. So unfortunately, most are not. But of course, there are different sectors. Some are doing very, very well. Those linked to shipbuilding, and many other sectors are doing well. Others not so well. But of course, I should mention that no companies that we are talking to, whether they are clients of ours or others in the European business community, are really considering leaving China. And there, of course, many are also investing, although we can see a huge drop in foreign direct investments into China.
Peter, we were talking earlier that the number of complaints from European companies have gone up, but it's due to the fact that now European companies are trying to get into bigger or other industries that they weren't in before. Can you talk about that, on what other industries European companies are trying to get into?
Yes, just to mention, so the European Chamber last week published their main publication, which is called a position paper, and that's actually a summary of all the recommendations that European businesses in China are presenting to the Chinese government, how to improve the business environment. And 2 years ago, we passed the 1,000 benchmark in number of recommendations, and this year they're introducing 1,141 recommendations. And that's not only a reflection of that European businesses are less happy about the Chinese business environment and recommend all these changes. It's also a reflection on the fact that European businesses are becoming active in even wider areas of the Chinese economy. And one area that we can mention is sports and sports management, where there's been a new group created of European companies who are active in that area. And they're, of course, then recommending recommendations to improve the business environment concerning licensing, concerning the possible market access in terms of organizing sports leagues, and providing advisory services. So one area that is growing, for instance, is skiing in China, where President Xi, prior to Olympics, but still continuing to promote skiing, and the growing Chinese middle class is increasingly interested in that. So of course, European companies are moving into that area, providing ski equipment, selling that, partnerships with Chinese producers, advising on ski resorts, etc. So that's just one area where European companies were not active before and are now active. Sports leagues, the same thing. So there are new areas where European business is going into China.
On China, we can just go on forever. So let's move to this final topic is on AI, because that's a big topic everywhere in the world. And China made a big splash when DeepSeek came out. But since then, I haven't heard too much. What's the latest on AI developments in China right now?
Well, in China, as everywhere else in the world, I mean, we are talking about AI all the time. But we're also seeing a huge separation in China since the DeepSeek moment, which was really very important for the Chinese domestic audience as well. And the Chinese are very proud of that. And of course, the access to data in China is very important. There's, of course, huge volumes of data available in the Chinese market, which is good for the development of AI products, but also the AI application, whether it's in Chinese government or in Chinese business. China is trying to speed that up at all levels to make sure that companies and government entities are applying AI at the maximum level possible. And we can see that also in production facilities where AI is applied increasingly. There are more and more robots, AI capable, which gives a much greater flexibility. Of course, in other parts of industry, in the service and consultancy. So China is at the same time trying to separate itself, and you saw that the access to NVIDIA chips is being reduced by the Chinese government. And there's also a lot of government money available for ventures into AI. This is one more example. We are not at the level of involution in terms of AI yet, but China is applying the same book to promote AI as they have with other industrial capacity. So it's something that everybody's talking about, whether they are in foreign companies or in Chinese government or Chinese business. And the speed is, of course, China's speed also in this area.
It's funny that you can bring up involution already in AI at this early stage in the development. But I know you said it's not there yet. But I guess you see the entire infrastructure being built out, whether it's electricity or servers, it's the entire ecosystem that's being built out, correct?
Yes, and we see China is also investing both in power generation, particularly in the sustainable side, but of course also building still coal-fired power plants, some of them with clean coal or with the capacity to clean the exhaust. But also huge data centers that can handle the processes necessary. And China is also trying to do a lot of research on making it more energy efficient. But there's no other country in the world that is increasing both its network and its generation capacity as much as China is doing right now. And I think the International Energy Association is also recognizing this, that more than half of global investments in these areas are happening in China. So, as I said, this is on its way to involution eventually as well, with the capital deployed.
There was an interesting article that Gavkal wrote, I think it was earlier this week, saying that because in China it's difficult to charge for software, as so many times previously, China is extremely strong, comparatively speaking, in hardware, and that AI glasses and these intelligent earplugs or whatever they're called, earbuds or whatever they're called, are progressing very quickly and selling very well in China. Is that so, Peter?
Yes, I was recently at a robotics fair in Beijing, which was amazing. And of course, you can see so many different suppliers of this type of equipment. And as you know, in China, consumers are very keen to grab onto the latest developments or the latest products. So the pressure to deliver the most advanced products at a reasonable cost level is huge, and the competition is also tremendous.
Very good. I think we're running out of time. So let me just try to wrap up the three main points I hear today. So first on geopolitics, it looks like China's doing pretty well, building up a coalition to try to provide some stability in the world order. Second, on involution, maybe it's a little too early for profitability to improve. And then lastly, on AI, it's pedal to the metal, I think is full force is what I hear. Is there anything you guys want to add, Peter and Fredrik?
No, I think that was a good summary. And just hold on to your seatbelt as the ride is going to get even bumpier, probably.
All right. Very good. Then thank you, Peter, for joining us again. And thank you very much, everyone, for listening to Inside Asia. Speak to you soon. Hold on to your hats.